What's up, guys? It's your boy Rod with another episode on Entry Tuesday. So today we're going to do things a little bit different. We are going to start off by showing you how to draw support and resistance perfectly, okay? And the strategy that I use when I mark up my support and resistance. All right, so without a doubt, let's jump right into it. All right, so first thing you guys are probably going to be wondering, let me actually delete these and start over so you guys could see where I'm coming from. Alright, so if, like really quick, if you want to get the dark mode like how you see my thing, just go here and turn the dark mode on, okay? Now right back to trading. Now, something that I've noticed and I've been using lately, if you know that, the charts on a graph. So these squares actually mean something, okay? And you can actually use them to your advantage when it comes to marking off support and resistance. So with that being said, let me show you what I mean. Okay, so, whoa, Wi-Fi is a little slow tonight. Okay, so as you guys can see here, right, let me delete that really quick. In these squares right here, now you want to line it up perfectly, okay? That's the thing. And you want to know that you can draw it on multiple different time frames. So for example, I'm showing you right now on the daily, and I'm going to show you how it really goes down. So on the daily, as you guys can see here, right, we can take out our pip calculator and measure in this square, which it extended into this square, but it was very minimal, so we're not going to highlight that square there. Okay, we're going to get the price range tool, we're going to measure. So this whole area here was about, let's say 55 pips, that whole square on the daily chart. As we go down to the lower time frame, right, we can see how it respected this level of support here, and the way we marked it off, whereas it came down, it tested, and then it came up. And if you guys want to then use some squares on the H4 for resistance, this would be quite sufficient here. Now, why do you use the squares? Because that helps versus putting a line. I feel like the line it could throw you off, but the square, it gives you more of an idea and flexibility as far as, like, especially when you're using your risk to reward ratios, knowing where to put your stop loss. So using these squares, and making them fit perfectly here according to what you're seeing on the graph, these zones, I feel like they're amazing. This is the way support and resistance should be drawn perfectly. Now let's take a look at the lower time frames and see how this transpires down. So as you guys can see here, I actually had one drawn, and you can tell that it's not this time frame, because the square is actually like almost half of it. So it was actually on the 5-minute, and I'll show you guys how I use this square in, for example, right? I was looking to see, hold on, whoa, this thing changed on me again. Was it on a 15-minute? Alright, so I was trying to see if, based on these squares that I drawn here, these are supposed to be 2, because it extended down. But based on these levels of, support, that if I was to consider a level of support broken, it would have to break through, this set of 2 squares here. It would have to come down, break past this for me to consider it broken. Okay, so that again gives you an idea of when it's broken, that the trend could be possibly changing, versus it breaking a line, and you think it's broken when it really isn't. It just tested, and for the newcomers, testing meaning it just touched that area and then went up. So for example, you can see that, the longest area here is this wick, which extends down to these squares. And as you can see, it could be possibly, depending on how you look at it, if you're using just one square, depending on how this forms, if this forms like a bullish candle, then you know that this area here was just tested. So this candle is still open. So, these are the things that you want to consider when you're looking at your support and resistance levels. And this was down on like the 30-minute time frame, which I highlighted this square here. I just feel like this is really neat. I'm actually going to show you guys on another pair as well, so you can get a little bit more familiar with it. But it's really cool. It keeps your charts very much in line. And hold on, let me get some of these off. It keeps your chart very much in line, and kind of keeps you overall understanding of what you're doing and what could possibly happen, and zones that are being respected from zones that are not being respected. So it really helps kind of guide you to the best way, especially when you mark it up with some different confluences and stuff like that. This is the way we were looking at it. Now be careful, guys, when you're adjusting this. I just found out the squares actually do get smaller if you stretch it out a little bit more. So sometimes the square that you've drawn before might not look like it's lined up. So just adjust your chart according to how you drew the square. Okay, now as you guys can see here, I have a bunch of squares. Why? This was at one point in time. Oh, let me go back out. Okay, there we go. This at one point in time ended up somehow in this zone here. So I used this and thought of that as a level of support that it tested before going back up. And as you guys can see here, when it got in this same area that it tested before, there was a bunch of, consolidation and mishap. So if something was to happen, we can consider that this might break out once it breaks past this area, or it can possibly turn around and end up coming down. Now, as you guys can see, these squares again, where, I marked off my level of support here, how all the wicks and everything, is pretty much within this square here, so this level here is a valid level of support. And if you wanted to consider this broken, you would have to see some candles form after or outside of this area here, just to give you a better idea that this level of support here, this whole zone, is pretty much broken and headed down. Okay, now the reason behind me showing you guys this, like I said, is to keep your charts looking neat, and you want to put it transparent for the newcomers. If you do click on the square and you do end up getting like some, I'll show you here. So let's say you go to the settings, right? Depending on what what you're using, you go to the little gear here, okay, and what you do is you go to the style, you click on the background, and you make sure the opacity is all the way down to 0%, because if it's not, then you're going to get that blue square and you're not going to be able to see through it. So you want it to be very transparent, so you put it all the way to 0%, and then that's the way you can see the transparency through it and kind of keep an idea of what's possibly going on in the markets. Let's actually go down to the 1 hour time frame, and as you guys can see, it hasn't broken out too much out of that area. the way we're looking and see how I zoomed in and the squares and everything lined up. As you guys can see, it's kind of like testing through these areas here. So it's bouncing, consolidating. So these are things that you guys want to highlight like this. You can see on like the 1 hour time frame where it came here down in this area, which you end up respecting, and when it came back up here, there's a lot of consolidation happening. So these are things you want to pay attention to, especially like I said, when you're using your risk to reward. Let me show you guys a cool way how to do it. So let's say you wanted to get in on a trade here. You wanted to get in on the sell, right? So you would get your short tool and you would put it up just like this, and you would know that you're risking, let's say that's the highest point here, or if you wanted to go to the top, you get in here, you're risking 50 pips. So you got this whole box here for it to go through before it tags you out. But obviously you want to take different confluences into consideration before taking this trade, because there's steps and procedures that you got to go through before you would take this trade. So as you guys can see, if you took this trade and you risk 51 pips, your payout would be possibly 151, because that's the next zone that it'll fall in, aside from the second zone here, which it could fall in, which is anywhere between 50 to 100 pips. So these are like different take profit areas that you can use this guidance to see where the market could possibly end. But I like to use the highest point and the lowest point, so which this 51 risk to 148, that's perfect. On a standard lot, you're risking 500 for $1,500. So I'll talk more about that. I have a breakdown. Everything's inside the course. Check it out. It's coming very soon, guys, but I did want to give you that free game today. Some moves that I caught, let's jump right on over into the entry side of town. Some moves that I've caught this week. I did not catch this. I was very late to the show. Okay. I was actually on US 30. So today, right, and it was actually today I caught this move. I'll show you guys what happened. So at one point in time, let's go down to the lower time frames. What's going on here? 30-30. I want to load up. Okay. So at one point in time, I seen that there was an engulfing pattern here. I then took the risk, took out my risk to reward ratio. It was like 80 something points that I was risking. So it was 80 bucks on the smallest size you can use on US 30, depending on your broker. Okay, so I used my short tool, kind of measured it up, kind of give you guys the exact outlook of how I had this thing set up. So it's like $85. Yeah. So I got in about there, and I was at work and I was selling a car, and pretty much I took this position, I put my stop loss in. By the end of the day, I got paid out $160 something from this move, because I closed out. As you guys can see, started pulling back, and there was no need to give back any of the profit that I made today. So that was a quick 80 pip risk for 160 pip gain, 1-to-2 ratio, beautiful, quick, easy, out in the market, out the market, and go on about your day. So these are moves like this that you guys want to catch. I'm still monitoring a couple moves here on GBP USD and GBP AUD, but as for now, I really don't see any entry positions on those two, so I'm going to keep a close eye on it to see what could possibly happen. All right, so thanks guys for tuning in today on Entry Tuesdays. Hope some valuable information came your way. And I'm going to start giving more and more valuable information to you guys here on Entry Tuesdays and Thursdays as a bonus, okay? So thanks so much for watching, and I'll see you next time on Thursday.